Hey everyone, and welcome to another episode of CryptoTV. I'm your host, Ornella Hernandez. Today we are celebrating that Bitcoin surpassed the $40,000 mark, yay! And we also look at how Bitcoin can actually be good for the environment. We also have a special guest joining us today, so stay tuned. The United Nations is hosting the COP28 event in Dubai. It is well underway, and the Conference of Parties, as it stands for, aims to take a coordinated global approach to tackling the problems of climate change. This year, it is being held in the United Arab Emirates, one of the world's largest oil producers. So we'll talk about what the COP has to do with crypto and Bitcoin specifically. 120 heads of state and even Pope Francis and King Charles of the UK have made an appearance at COP28 this year. As the name says, it's been around for 28 years since the first edition of this conference. And the main thing that it has achieved so far is to raise awareness of climate change issues, like reducing greenhouse gas emissions or reducing dependence on fossil fuels, for example. It has made it clear that something needs to be done. But it has done very little to address the problems, at least from an economic point of view. And it has also failed to get all of the delegates to agree on what to do. So as a result, there has been a lot of inaction at the state level. Well, we're already halfway through this 13-day event, and about 70,000 attendees have registered for it. But don't think that all of these people have arrived on bicycles or electric cars by any means. But my biggest concern here is, when are we going to focus on the technological advances that will help to actually combat the acceleration of climate change? Let's address one of those. I'm talking about Bitcoin. Now, I'm not saying that it's a solution to all of the difficulties that climate change brings, nor will it solve many of the barriers to greater adoption of renewable energy, but it actually can help with decarbonization. And hey, it wasn't so long ago that Bitcoin was criticized for its environmental damage. Investors shunned the very idea of even learning more about Bitcoin because mining was considered harmful. Climate activists campaigned for a code change, and lawmakers wanted a ban on mining. In 2017, Newsweek magazine even proclaimed that Bitcoin mining would use all of the world's electricity by 2020. Fortunately, this has not happened, and several studies have debunked these false claims. Rather, these studies have highlighted the potential for Bitcoin mining to support greater investment in renewable energy and generation, and even methane capture. The narrative has changed. Even regulators have refocused their objections to cryptocurrency to focus more on tackling the illicit uses of it. Basically, Bitcoin mining can economically support the construction and operation of renewable grids, even in remote areas, by acting as an energy consumer. You see, Bitcoin mining is virtually the only industrial energy user that is not location dependent. I mean, the equipment does not really care where it is as long as it has power and an internet connection. And it can also be turned on and off with relative ease. Bitcoin miners can also help to mitigate methane emissions from fossil fuel production by converting the gas into energy to power the mining machines. According to the International Energy Agency, methane is responsible for approximately 30% of the increase in global temperature since the Industrial Revolution, and fossil fuel production is the third largest source of methane pollution after wetlands and agriculture. Eliminating some of this pollution and at the same time contributing to the security of a financial network seems like a win for energy companies and Bitcoin miners, investors, and of course the environment. There is much more to say about this, but in short, Bitcoin is actually an important piece of the puzzle in the fight against the acceleration of climate change. And this year, COP28 will have its first delegation of Bitcoin miners. I don't know exactly to what extent Bitcoin miners were present at the previous COP conferences, but the fact that this time there will be an official delegation with a high-quality panel seems significant. It also cements the change in the narrative. and hopefully will help to bring more appreciation for Bitcoin's potential and also to promote action and solutions. There is still a long way to go, I know, but hopefully this event this year, the COP28, will help to push the narrative forward a bit, to connect different interests, and hopefully people can work together more. Now, staying on the topic of Bitcoin, ladies and gentlemen, Bitcoin is now the 10th most valuable asset by market cap in the world. It has a 820 billion market cap. And look at this, it's just behind Meta and Nvidia and above Berkshire Hathaway. This is honestly pretty crazy to think about. The fact that a cryptocurrency is sandwiched in between the major institutions and tech giants of the world, especially given the fact that over the last 10 years, Bitcoin has plummeted multiple times. It has survived the Mt. Gox crypto exchange collapse, the stablecoin project Luna implosion, and multiple other exchanges and hedge funds going bankrupt. Bitcoin gets a bad rep for harming the environment, like we spoke about before, and for being used to fund illicit activities. Bitcoin has also been banned by multiple countries like China, and now Bitcoin has become one of the 10 most valuable assets in the world. Come on, this is pretty impressive if you ask me. Now, let's talk about the price of Bitcoin, because the price has also seen a big increase. Why this sudden boom? Well, it's likely due to a number of factors. On one hand, there is a renewed atmosphere of confidence in the air, one brought on by the expectation of a looser monetary policy for the coming year. And this implies that there will surely be more liquidity in the market to invest and that people will look to alternative assets other than fiat. On the other hand, December is usually a very favorable month for Bitcoin historically. During this period, there is more demand for the cryptocurrency from investors who want to benefit from the Christmas and holiday effects and their year-end balance sheets. And finally, a key factor is that institutions are starting to bet on Bitcoin seriously. And we are not just referring to companies or investment funds, but also to governments and central banks. These players give Bitcoin and the greater cryptocurrency industry more credibility, which attracts more investors who are starting to invest because institutions are starting to invest. So it's like a circle that makes the price of Bitcoin go higher and higher. Of course, now the buzz is all around the ETF narrative. Now, what is an ETF and why is everyone so excited about it? Well, an ETF is an exchange-traded fund that trades on the stock exchange like a stock. Its objective is to replicate the performance of an index, a basket of assets, or an investment strategy. For example, there are ETFs that track the price of gold and oil, and now Bitcoin. ETFs are a way to diversify your portfolio as they give you access to markets and sectors that might be too costly. They also have tax and liquidity advantages, so you can buy and sell them at any time of the day. Many investors believe that exchange-traded funds are the key to tapping the potential of cryptocurrencies, especially Bitcoin, which is the most popular and valuable one of them all. Bitcoin ETFs could also attract more institutional investors such as banks, pension funds, or corporations, which until now have been hesitant to enter the cryptocurrency market because of its volatility, its lack of regulation, and also its rep for being used for illicit activities. Now, Bitcoin ETFs are not yet a reality. The U.S. Securities and Exchange Commission, the SEC, has rejected several dozens of applications in recent years, arguing that they do not meet investor protection, fraud prevention, and market transparency requirements. But that could soon change, folks. The SEC has several Bitcoin ETF proposals pending review, and some believe that it may greenlight some of them this upcoming year. Now, this has inspired hope among buyers who see Bitcoin exchange-traded funds as a unique opportunity to participate in the cryptocurrency boom. And it appears that institutions have also slowly started allocating their funds to Ethereum since September of this year. And this increased activity may have to do with institutions' overall optimistic sentiment towards crypto. Institutions want to invest in crypto, okay? But they want to do it with clear rules. That's why they closely follow the regulations that aim to put some control to this volatile and complex market. Institutions can't really afford to be anarchists because they manage other people's money. So any mistake can get them in real trouble with the authorities. For them, the easier the rules, the better it'll be to invest in Bitcoin. And so as institutions have stepped in, demand has grown, and with that demand has come higher prices in the market and a general enthusiasm within the whole ecosystem. So Bitcoin is soon expected to become a more serious and secure market. What do you guys think? Will Bitcoin reach an all-time high in 2024? Let me know in the comments. And stay tuned, because to talk about all this and more, we have a special guest joining us on CryptoTV. Today's guest on CryptoTV is Stefan Kimmel, who is the CEO of a new investment platform based out of Abu Dhabi called M2. How are you today?
Great, Ornella. Thank you very much for having me on the show today.
Thank you for coming on to CryptoTV. I wanted to learn more about M2. I recently attended its launch party last week, which was super fun. You had a Demi Lovato, you had Black Eyed Peas. It was a great time. And I wanted to ask first, what is the purpose of having these huge launch parties? Do you think that in crypto that tends to be a theme?
Yeah.
Do you think it serves a purpose?
Well, look, I mean, obviously the reason for us to have the launch party is to tell the world we live now, to make a bit of a splash in the market, just get the message out there, because we knew we need to make a name for ourselves. We had a long debate, to be honest, internally, whether to keep it smaller or larger. I think it's interesting, though, in the spirit or in the wider environment of Bitcoin going back up, the bull market is kind of back on. It seemed like the right thing to do. Funny enough, during the party, Bitcoin actually went up by almost 900 points just during the party. So there was a lot of laughing.
I wonder
about
if that's a coincidence.
Whether we kicked it off, but no, it's essentially to make a name for ourselves, to get the message out that we exist, and then the rest obviously is probably more moderate, more steady state. Okay,
before we get into the message of M2, I do have to ask if what you do think about the market rally right now, Bitcoin going up, it hit 42,000 this week.
Yes.
And also I think it has a lot to do with maybe the institutions coming in and hopefully soon an ETF approval for Bitcoin and maybe even Ethereum. So I wanted to ask what your thoughts on that and where you see the market going in the next few months.
Yeah, look, I mean, 2022 so far has been a fantastic year. Actually, 2023 already. It's been a fantastic year. We are about 160%, give or take, already year to date. And we have the biggest events still ahead of us. So the one you mentioned, obviously, is the ETFs, which are expected to be approved in January. There's, I think, a total of 13 now.
Yes.
And that would be a complete game changer.
So you think they will be approved, or one of them?
It's my expectation. I think the general public expectation as well as mine is that maybe not all of them, but the majority of them will be approved. The biggest one, of course, the most prominent name is BlackRock.
Yes.
If I have the numbers right, I think in their history, they've done several hundred ETFs and only one of them has not been approved, all the others. So they kind of know what they're doing. Supposedly they've already taken in funds. And that obviously is huge. If you think about it, BlackRock alone has about 9 trillion USD under management.
Yes.
Big institutional money across those ETFs will be a complete game changer compared to the more retail-driven investors that we've seen so far. Just the sheer amount of potential money that could flow in, and that being institutional as opposed to retail, in my expectation, is a complete game changer for the industry, for sure.
Definitely. And it shows that there's also demand for these assets.
I think the appetite has been there for a long time of institutional investors. What kept them from investing so far is just the lack of regulation. Of course, institutions can only regulate it in a regulated space. They can only invest in a regulated space. With all the question marks around regulation, especially in the US, which is still lagging a bit, it was hard for them to invest, and also for them to internally get ready to get their heads around risk appetite, regulation, rules. Is it real? Is Bitcoin and others, is it a real thing? And I think they've come around now in the last 2-3 years. The institutional side is ready now to invest. And that to me is the whole, the takeoff for the whole next phase, the next era of crypto.
Yes, definitely a game changer. And like you said, the US unfortunately, I'm from the US, so it is lagging. I can attest to that. Do you think, what do you think if you compare it to the Middle Eastern markets, so UAE, Qatar, Saudi? How do you see regulation in these markets?
Yeah, so it's still a bit different from country to country. Some countries are still debating and are preparing to release regulation, like I'll be in Saudi next week, Monday. There's a lot of talk and discussion, but not yet released in the same way. Of course, the leading one is the UAE. The ADGM specifically is the oldest regulation out there in the world. It's one of the most recognized and esteemed regulations. So that's a great foundation for crypto to take place. And you see a lot of projects and interested parties and basically strong interest collaborating here in the UAE. It's a great place to be in crypto, and the government is behind it. That's another thing. There's a real intention to make UAE a crypto hub in a safe and regulated manner.
Yeah.
It's not. They don't want Wild West and madness like other places. It's the idea is to have this a solid, regulated, and transparent place to do crypto, and that's a great foundation.
So is that why M2 was set up in ADGM, the Abu Dhabi Global Markets Free Zone?
Absolutely. So the foundation of everything we do is we want to be transparent. We want customer assets to be safe and customer assets to be protected. And being regulated in a place like the ADGM lays the foundation of that. There's clear rules around transparency, about disclosures, about what we're allowed to do and what we're not allowed to do. That protects first and foremost, our investors, the users, as well as ourselves. There's clear rules and we can abide by those rules. And I think that's also a big part of that next era of crypto. The very early days where a lot of great, fantastic things happened, but that's coming to an end.
Yeah.
And we see a lot of what happened in the last year and a half, up until recently.
Lots of collapses.
Yes, but that's now the foundation, I think, of the next phase, including the institutional flow in.
All right, so let's get into it and the different products of M2. I know you guys mostly are buying, selling, exchange, but you have other products. So talk to me a little bit more about that.
Yeah. So as you said, the foundation is we do buying and selling. So that's spot markets. We also offer futures. So that the whole spectrum around buying and selling crypto.
Okay.
The other big aspect is our currently earn plans. So what that means is when you already have crypto, you've bought crypto, and you want to earn interest on that, we offer that. So for instance, our flagship product right now, that's the most talked about one, is we offer 10.5% on Bitcoin, 10.5% on ETH, and same on USDT. So those are the flagship ones, and then lower ones on some of the other pairs.
Okay, that's a 10%.
10%, up to 10.5%.
Okay.
It depends on, you have different durations, and of course, the longer you commit to an earn plan, the higher the interest we pay.
Oh, okay.
So that's the key one.
Okay, so it's a way to earn yield as a form of staking in a way, but you can also do it with Bitcoin and USDT, you said?
That's correct.
Okay,
Yeah.
Amazing. And so how are you guys trying to get users right now? Like, how do you differentiate yourself enough from other exchanges out there to acquire new users and retain them?
So I think the two key aspects in my mind, number one is regulation, to make sure it's safe, it's transparent, and users can trust that their money is protected or their assets are protected. That's the foundation of everything. Especially on the institutional side, since we serve both retail customers as well as institutional customers. The other key aspect is the yields that are being offered, of course. So usually investment follows yield. We offer market-leading yields. So the combination of you can earn high interest on a safe platform, that's the foundation of it.
Yeah, definitely. Okay. So how does this exactly differentiate from staking, though? Could we just go into that a little bit?
Sure.
If we're comparing to other platforms out there and why the yield-bearing product is unique?
So staking can be done on proof-of-stake chains, for instance, Cardano and various others. And basically, technically, it's your assets are committed on a validator that serves as the proof of stake,
right.
And then you earn, so to speak, a return on that. So technically speaking, it's limited to certain chains, but which is not available, for instance, on Bitcoin. Bitcoin, of course, the validation equivalent happens in mining, so that can't be done. What we do, however, is the tokens that are submitted for the BTC earn plans, we use for Bitcoin mining and to buy hash rate, which then in a similar, technically different way, but generates the yields that we pay out back to customers.
Okay, I see. All right, and then are there other maybe trends that you guys are looking at right now, given everything going on in the market, that might be relevant for M2 users? Like, I don't know, maybe it's NFTs or something, like the boom in the NFT market right now. Like, are you guys looking at that? Does that concern you at all?
Yeah, NFTs specifically, are not extremely popular right now. I mean, I'm obviously personally hoping as well that they'll come back up. And I think they will, but right now that's not the hottest topic. What we really try to do is the end-to-end portfolio of products that are interesting for a customer to really have. After this phase is over, so we're going live now with a bunch of products. The next one will have, for instance, a payment card.
Okay.
We'll have lending. We'll have the ability to deposit and withdraw from your bank account. You can already buy crypto with a credit card. So we try
you guys have a credit card?
Yes, we do.
Okay.
So what we do is we try to have a comprehensive portfolio to make it as user friendly as possible to use our platform.
Okay, so why a credit card?
Well, technically it's a prepaid card, but no, it's just because there's a defined interest for users that have crypto to not have to withdraw it, put it in the bank account, and then use the card. Yeah. I mean, that's not user friendly. So what we do is it's not live yet. That product will probably come in Q1.
Okay.
To have a card, a payment card, where you can go straight to any point of sale, any store or online, and use your card, and it gets straight withdrawn from your crypto accounts.
Okay. Sign me up for that when it comes live.
Happy to do that.
All right. So what led you to M2, to the world of crypto in the first place? Were you always, what was your original background and training in?
So my original background is in traditional financial services. I was always in the fintech space, at the border of finance and fintech, always looking for new ways to use technology to offer better services in a more secure way, in a more convenient way to customers. Did that for a long time in TradFi, was an IT service provider. I ended up being the COO of one of the banks here, of Commercial Bank of Dubai.
Okay.
Tried to drive that digital transformation from within traditional finance, but then you hit a limit at some point. And then you see crypto and all the innovation that happens in crypto, and it's just, frankly speaking, it's just a much more exciting place. I then had an opportunity to join Kraken when they launched their office here.
Okay.
So I was with Kraken for a while. And then had the opportunity to do M2 and launch something completely new with new features, new ideas, new ownership. And that was just a very exciting opportunity. So I was glad to take that. Okay,
and what's so far been the most rewarding aspects about being in the industry and the most challenging, would you say?
Look, it's funny enough. In crypto, everything is a bit related or correlated to the market price. So while we were building it and thinking about how M2 should be and how it should look like, what it should look like, it was obviously in the middle of the bear market and bad news every day, and then of course some implosions in the wider space. A lot of bad news in the market. So that was painful. And I have to say I'm really grateful to our shareholders and investors to have stayed the course and to go with the conviction that we're doing something great, something future-proof, something new that's better than some of what has been around.
Can you say that it's future-proof? Can you say that it's truly more secure than everything out there?
Look, I mean, it's a bold statement to say it's better than everything out there. I'd say I can say with a great conviction that it's better than a lot of things that have happened in 2021, 2022. I mean, we've seen a lot of collapses. We, through court cases and other means, have seen some of the business practices and the security protocols, the operational gaps that were in a lot of those platforms, be it DeFi or centralized. And on both sides, we've seen a lot of issues. And a lot of the learnings from what happened last year was flowing into how we built it. I mean, we saw the news coming in, and we were able to say, okay, this is how we're building it to avoid all of this to happen. Plus, another thing we've done differently, I think, than some others is the team we've onboarded is by and large a lot of financial services people with a lot of experience in traditional financial service that are used to build something that's that is resilient, that's future-proof, that has people who've been through financial crisis, who know what it means to do proper risk management and to drive that. So that experience of, let's say, long-term financial services best practices, as well as the learnings from what happened in crypto for the last, let's say, 2 years, all we're built into how we set up M2, and that's why we think. Nothing can say it's 1,000% future-proof, but I think I'm very confident what we're doing is as future-proof as it comes.
All right, and is there any advice you have maybe for newcomers in the space, or for those who maybe don't have as much experience and would like to sign up for M2? Like, what would you say to them when it comes to investing in this market?
Yeah, look, some people, it's an interesting question. Some people say only put money in crypto that you can afford to lose.
Mm-hmm. Put money in anything that you can afford to lose, not just crypto.
For that matter. Yeah. I only partially subscribe to that. I think only put money that you don't need short term. I think the opportunities long term are great, but it's a very volatile asset.
Yes.
So if you need to pay back a mortgage or ongoing commitments next week,
don't gamble it away.
Yeah, don't put it in equities or in crypto. Definitely not in crypto. If you can afford to hold on to it for a few years and wait for the right moment, I think a certain allocation of your overall portfolio, depending on risk appetite, it's a great thing to do. If you're a complete newbie, I'd probably say, stay away from too adventurous token. Perhaps start with Bitcoin and Ethereum.
Okay.
Because they're the most robust, the biggest market cap, slightly less volatile than the others, and just less risk than others.
Definitely. All right. Good advice. Good advice. And what is the best way for our audience to get in touch with you and to learn more about M2?
So the easiest is go online. It's m2.com is the URL. So you can sign up, get an account, and test it out. That's the best one. We also have a website with a lot of product information. We are on Twitter, on social media, so you can find everything you need to know about us anytime.
Okay, amazing. And one last question. Do you honestly believe or think that we'll ever achieve a fully blockchain-enabled, decentralized world? Do you think we're on our way there?
Well, I think there's probably still place for things that are not fully blockchain enabled in Web3. I think it'll be a growing space in the years to come for sure. There's a lot of great use cases in identity, in gaming, in finance. There's a lot of great areas in health. So I think it'll be tremendously growing. It's a fantastic technology. There's probably still things out there that rely more on the traditional.
Yeah, I guess not everything needs to be on chain.
Yeah.
All right. Well, thank you so much for your time, Stefan.
Well, thank you very much, and it was lovely to be here.
Likewise. Thank you, everyone, for tuning in. This was Stefan Kimmel, the CEO of M2, and everyone, please stay tuned for the rest of CryptoTV.
In the crypto market, Bitcoin price is at $43,307. Ethereum is trading green at $2,250 today. AVAX is up nearly 27.35%, trading currently at $26.89. And immutable XIMX is also up with a price of $1.42.
Keep an eye on the market, folks. That is all for today. Thank you for tuning in. Make sure to give this video a like if you like me, and check out other Web3 TV coverage. See you guys later.